The broadcast is now starting. All attendees are in listen-only mode.
Okay, good afternoon, everyone. Today is March 21st, and it's about 1:45 Chicago time, and this is another hour of CFRN Thursday, where we go over the CFRN Trade Set UP in slow motion. Okay. I started early because it's a little slow at the desk here, and I thought I would knock out the disclaimers that I have to go over before I have to present. So I'll do that in the next 10 or 15 minutes. And then the game plan is to go over the trade setup. This is the same setup that Michael does in the training room. I'll go over it. You'll hear some of the buzzwords and some of the things that he talks about in the room. So when you are, especially if you're brand new and you're on trial period, you'll understand what's going on. Okay. So we'll go over the trade setup, and then after that, we'll get into a live setting. And, if we'll look for that same setup in a live market, and we'll go inside a DOM and we'll enter the trade. I'll show you how to do that, how to put the stop in, how to manage the trade, and then when to exit. All right. So, from start to finish, we'll do everything. And like I said, this is a lot of the stuff that you see this afternoon will be what Michael's doing in the training room. But in the morning, it's a little bit faster pace, high speed. So, hopefully this will help you absorb what's going on while you're in there. Okay, so that's kind of the goal. Ask questions along the way. You have a questions box there, so feel free to do that. In addition to that, if you are brand new, this is going to be a great syllabus for you to lean on. So feel free to take notes. It is recorded. Everything's on YouTube. So you can go back, and I think I've been doing this for a while now. So every Thursday, I record them. I post it on Friday, and you can go back and review. So, like I said, if you're brand new, the idea is to give you kind of an eyes wide open approach while you're on the trial. Guys that are CFRN members, this will give you a chance to, have additional screen time, get to know the personalities of the markets we're trading, give you a chance to ask questions. If you're struggling, or you're still not running on all cylinders, it'll give you a chance to it's special. Give you a chance to ask questions and go over anything that you're having problems with. Okay. Throughout the presentation, I'm going to point out some observations that some of the traps that people kind of fall into if they're spinning their wheels. Okay. So you'll hear me talk about markets that are trending, drawing trend lines, things like that. So you'll get a chance to hear it from my voice. Maybe that registers. Question volumes at the bottom, and we'll go from there. So, all right, Frank, I'll go over that too when I get there. All right, first order of business are my disclaimers. So again, as I always say, I don't like to just throw them up, tell you to take a few minutes to take a look at them, and then throw them back under the blanket. What I will do is take a few minutes to go over it, and because it is important, because I've been doing this for almost 25 years, and I've really seen the good, the bad, and the ugly when it comes to trading. This disclaimer is warning you of that for the most part. Basically, it's saying, look, if you're not using stop losses, if you don't have a trading plan, if you're not looking over your trading account, if you're not engaged in what's going on in the marketplace, this disclaimer is going to hit you right smack dab in the face. And it says that you can lose everything and some in your trading account if you're not applying some of those simple rules. Okay. Not only that, the funds that you are putting in a trading account should be risk capital. That means it should be money that you can afford to lose and not change your lifestyle. Okay, so that's what that means in a nutshell. Now, if you are wondering what is CFRN and what that's all about, well, we just talked about the disclaimer about some of those variables that are important to keep you from being a casualty, so to speak. So what are we going to learn? Well, you're going to learn, you'll have a set of trading rules. You'll be using stop losses. Every trade has an 8-tick stop attached to it, right? You're going to be on a 4-tick range chart, so you'll have to be actively engaged in the marketplace. There is a set of risk management. They use aggressive risk management, so you'll have to be in front of the screens. Not only that, you'll have to be in front of a DOM. That's this thing on the side here, this tower. This is where we are buying and selling, okay? If we think the market is going up, we're going to left-click in the green. If we think the market's going down, we're going to get left-click in the red. So this is where we do our buying and selling, okay? So the disclaimer really is, it's out there for good reason. It's there for the, really to, it's like a warning label for those guys that are brand new getting into our space, okay? My experience with the guys that come down the CFRN path, they're already numb to the disclaimer. They've been to this guy, and they've been to this guru, and they've been through a couple of trading accounts. So they're again, they're kind of numb to this. All right. So the disclaimer is out there. It's important. Again, I don't like to just throw it up there and say, hey, take a look, and then shove it back under the blanket. It's there to talk about. So, why not be transparent about it? Okay. We are talking about a leveraged vehicle, and there's risk attached to it. Second disclaimer, my relationship with CFRN. CFRN, they are the educator. It's their tools. It's their indicators. They're the mentor. Okay. Their indicators, which is what you're seeing here on this chart, is built into my platform. The platform that I'm featuring is DtPro. Okay. I represent the execution, the brokerage, the platform. If you decide to take a trial of the platform and the indicators, and if you're having problems, you're going to call me directly. I'll help you download the platforms and get you through any obstacles that you're having. If you say, hey, after the trial, I want to be a CFRN member, how do I do it? Then you'll reach out to them directly. Okay, if you exchange money, that's going to be between you and them. Anything on their website, like the members area, the Logic 247, the daily doubles, the concierge alerts, the Thursday night workshops, all the videos in the members area. If you have any questions about that, you can call them directly. I know Valerie is on standby. She's now a great asset to them. I know she's answering emails, and she's really attentive, responding. So so you'll reach out to her. Okay. So there is a line between the two of us. All right. I don't work for them. They don't work for us. They don't get any part of the commissions. There's a line in between us. All right. That's my phone buzzing, so stand by. I'm going to put you on hold for a second. Okay. How the heck do I turn on the mute button? All right, so I'm back. So again, my phones are going to ring. All right, so I'm going to have to hit mute and go from there. Okay. So I'm sorry, I got sidetracked on the 10-year note with somebody. So let me get back on the path. So again, I was talking about my relationship with CFRN. Okay. And so there is a fine line. There isn't commingling of funds or anything. They're the educator. Their indicators are inside my platform. I support the platform and the brokerage. They support the education. Okay. Now, yes, every Thursday, I go over the trade setup for an hour. I do that because there was a demand for people. There was a demand. People wanted, someone to slow it down for them. So I took the initiative and raised my hand to do it. Okay. The idea was, to, give people an eyes wide open approach if they're taking the trial, which is good. Transparency is great. And the guys that are CFRN members needed help. And so my thought was, if you're a client of mine and if I can help, it's a win-win situation for everybody. So that's why I do it. And we do it for an hour every day, every afternoon. And, you guys get a chance to ask questions. So if there's something that you don't understand of what's going on, just ask and we'll knock it out. Okay. All right. That's true. That's true too. All right. I keep reading your comments, Frank. All right. So anyways, here we go. All right. We're going to learn about the setup now. Slow motion. So for those guys that are brand new, all right, listen up. So first thing we're going to do is we're going to talk about the time frame. Okay. We're on a 4-tick range chart. Okay. So if you have DtPro, how do you get there? Well, let me do this. Let me shut off the live account. All right. I'm in demo mode. So just to be very clear. All right. Because I have other accounts and stuff and I don't want to hit wrong buttons in the wrong account and it's just going to get messy. Okay. Time frame. Okay. Chances are you're looking at a time-based. You might be on a daily, might be on an hourly, 5-minute. The idea is to get to a 4-tick range chart. So next to the time frame, 5 minutes, you're going to hit this drop-down box and go down to custom. Box is going to open up. You're going to select range bar. Make that one look like a 4, then hit OK. This is the S&P 500 on a 4-tick range. Here's the first trap that people fall into. They go into custom. They select tick bar because CFRN is always talking about ticks, getting ticks out of the market. They change that 2 to a 4, and then the chart looks something like this. Obviously, if you're staring at something like this, this is dead wrong. Okay. 4-tick range. The tip off here is at R in parentheses. Okay. Now, there'll be some markets like the mini Russell, the NASDAQ, and the Dow. Right now in a 4-tick range, it's popping. It's all over the place. Okay. So what we'll do is we'll end up slowing it down and changing it to an 8-tick range chart. Okay. The rules still apply. The only things that change are the risk, right? The stop loss. So instead of being 8 ticks as advertised here, right? It's going to be 16 ticks. Okay, we're just going to double it up because we're doubling up the range. Okay. So if you're on a 4-tick range chart, the height of each candle is 4 ticks. Okay, sometimes they look bigger, sometimes they look smaller, but in the end, they're all going to be 4 ticks in height. Now, why is that? Why are we on the 4-tick range? It's something that they developed. But what's important about it is when you're in the training room, Michael is going to call out some highs and lows of the bar. So what he's doing, he's setting up to be proactive. Proactive means he's going to be placing orders to get into the market on a stop. Okay, that means he'll be getting in above the market if it breaks out to the upside, or he'll be getting short if the market breaks down below the current market price. Okay, so we're setting it up that way to be proactive. Okay, so you can do that if you know the height of each candle. If you know it's defined at 4 ticks, okay, you can be predictive, knowing that if we get a 5th tick, that we're going to print a new candle. All right. So if you're wondering, yep, I've heard this before, how to Michael. It's a little confusing. I'm trying to catch on. You know, the cliff notes to that really is this. Just take the higher the low of then the current bar, you know, the high low of the current candle. Just add or subtract 5. That is the exact number you're going to click on. Okay. Okay. Just add or subtract 5, and that'll be the exact number you're going to click on. And if you're doing that, you're going to be right-clicking. Okay, we're right-clicking in the green, or we're right-clicking in the red. Okay, the logic trades, okay, out of Telegram, these are all right-clicks. Okay, these are all right-clicks. So you're going to be right-clicking above or red-clicking in the red. Okay, we're entering the market on a stop. That's what we're doing. Okay, so again, the time frame on a 4-tick range chart, okay, and possibly an 8-tick range chart, depending on the market that you're trading. But the rules don't change. And here are the rules. We're going to work on the top portion of the chart here. Okay. The red and blue line is referred to as the MA1. Okay. The green line is the BBC. That is short for bullish bearish cross. Together, that makes up step number 1. Okay, which is this. When the MA1 crosses the BBC and the MA1 is red, that's a bearish cross. If the MA1 is blue and crossing the BBC, that's a bullish cross. The one that's highlighted here by the arrow is a bearish cross. The reason is the MA1 is red. Okay? The MA1 is red. So from this point on, I want you to be thinking about color too. Because if you're going to stack up the probabilities in your corner, ideally we want everything to be the same color. All right? So again, red is associated with sells. Blue means buy. Okay, we're looking at buying opportunities. The one that's highlighted here, that's a bearish cross because the MA1 is red, so we're looking at a selling opportunity. Okay, we're looking to get short. Okay, that kind of leads us into step number 2 because, you know, notice I didn't say get short here and get long here and get short here. I said we're looking for an opportunity to get long or short. Okay, so here's what we expect to happen after the cross. Here's the normal thing. After the cross, we expect at some point the market to gravitate or challenge or touch, ideally touch, the BBC, which is that green line. Okay, not only are we looking for the touch, but we're looking for the close in the direction of the trend. Okay, we identified the trend as being bearish, set by the MA1 crossing the BBC, and the MA1 is red, right? So we're looking for a red candle. All right, so we're starting to see the pieces of the puzzle kind of unfold here. Okay, everything the same color. So if we're looking at a bearish cross, we're looking for a red candle. If we get a bullish cross, we're looking for a blue or a green candle. That's an up close. You're looking for a close in the direction of the trend. Okay, so that is step number 2. Okay, step number 2, gravitate toward the BBC. We're expecting it to touch it, but then close in the direction of the trend. As that's happening, our eyes now go down into the oscillator portion of the chart, or what is known as the slingshot. Okay, this is step number 3. Okay, so here we go. The red and blue line inside the slingshot is referred to as the cycle. The green line, nothing fancy about it. It's just the green line, okay? But what's important is this. What we're looking for is the divergence or the separation that Mike is talking about, okay? And here's what it is. The green line pulling away from the cycle, okay, here's the cycle. It's kind of like a slingshot, okay? You're pulling the green line back, and the further you pull it away, the farther the market's going to go, right? So what this is saying is, hey, we are in a downtrend. The momentum is bearish. Why? Because the cycle is red, right? We got a bearish cross up here, right? So we got some bearish momentum here. This price action in step number 2, with the green line as the green line's pulling away, is suggesting, you know what? This might be just a pullback in this ongoing downtrend. So with the divergence or the separation that Michael is talking about inside the training room, along with this price action here in step number 2, we're going to get short, okay? We're going to get short. So what that means to you, if you're brand new, okay, is we're going to go inside this tower here, okay? This is called the depth of market. We're going to go inside and left click on the red and get short. And if the market does go down, that means in that direction, we'll make money. And along the way, we're going to move the stop, move the stop, move the stop, move the stop, okay? Now, get back to this. All right, so we got the momentum. It's going down, okay? The price action up here, okay? In conjunction with the green line that's pulling away is saying, hey, get short right here on the close, okay? What we expect to happen, the normal thing to happen after this, step 2 and step 3, is we expect the green line to ultimately come down and touch the cycle. That's what we expect to happen. And at the same time, the market is going to make a new pivot low, okay? I don't know if I could highlight that. A new pivot low, okay? Let me darken that up. We expect in the market to make a new pivot low, and it's at this point here, when the green line gets into the cycle, this is the point in which we close out the trade, okay? So basically, the trade is happening inside the slingshot. That's where the trade exists. Because in the end, here's what we expect to happen over and over and over again. Green line's going to pull away and fill in the gap. Pull away, fill in the gap. Pull away, fill into the gap. Until the cycle turns blue. And so now we're looking for bullish opportunities, right? So then we're looking for the green line to pull away, okay? Get into the gap, pull away, get into the gap, okay? That's what we expect to happen. And along the way, we're going to sell this rally, sell this rally, sell this rally, buy this dip, buy this dip. And the only caveat is we're going to continue that pattern as long as we're trending. If we're making lower lows, if we're in a bearish setup, or if we're making higher highs, if we're in a bullish scenario, okay? That's what we're going to end up doing. Like I said, as outlined, everything is going to have an 8-tick stop attached to it, okay? So if you're brand new, if you're trading the crude and the gold, that's $80 a contract, okay? If you're trading the S&P, that's closer to $100. If you're trading the mini Dow, that's closer to $40 contract. All right, now hold on. My phone's buzzing again. All right, I'm back. All right, so that's it in a nutshell. Okay, every trade has an 8 tick stop attached to it. All right, so the trade exists down here in the slingshot. The movement up here, the price action is kind of confirming it. Okay, so that's the pattern we're going to look for. All right, so let's get into it. Okay, so the first order of business, if you're writing things down, the number one thing on your piece of paper is, or should be, is, are we trending? Are we making higher highs? Now I'm looking at the S&P right now. Okay, and we were congesting a little bit, right? Now we have broken out. Here's the one thing I want you to get in the habit of doing, is hitting the zoom out button right here. Okay, you'll get to see a little bit more real estate, or what's happening to the left of you. Okay, so get in the habit of hitting that zoom out button. Sometimes you get hypnotized by Mike's charts because they're blowing up and you really can't see what's going on over here. But if you take a few steps to do this, you'll know whether or not we're trending. All right, so we are trending and we have a bullish cross. That means the MA1 is blue and crossing the BBC. So as I said before, we're looking for buying opportunities. I didn't say go long, we're looking for buying opportunities. What is the normal thing for the market to do, okay, after the cross? The normal thing for the market to do is to gravitate toward the BBC, which is this green line. Okay? In the process, you're always going to draw a trend line. Okay? And the reason being is it's twofold. Number one, if the market has so much momentum, it's not going to get to the BBC. Okay? It's not. How do you know? You draw the trend line. That's what you do. And if we close above the trend line, like it did here, that's an indication that, hey, you know what? We might be finished going down, all right? And we should be heading up from here. Not only that, the other reason why you draw the trend line is because if the cycle, and as I said earlier, ideally we want everything to be the same color, right? We want everything to be the same color. So we'd like to have a blue cycle. We'd like to have a blue MA1. Okay, we'd like to have all those active ingredients. Okay, that stacks all the probabilities in our favor. But when the cycle turns color on us, as it does here, it's watering down the probabilities. The trend line is required, and a close above the trend line is also required before we decide to take any positions. All right. So, what does that all mean? We have a trending market. That means we're making higher highs. The normal thing for the market to do is to pull back toward the BBC. In the process, we activated our trend line and drew it. This close here was a close above the trend line. The trend line was required. Why was that? Because the cycle turned red on us. So right here on the close of that candle was a long. This was a long position. Okay. Now, what we didn't talk about is the money management part of it, right? Which is this. If the market goes plus 4 ticks in our favor or closes on the other side of the MA1, which is this line here, we move the stop to break even. Okay, what's break even? Our entry. All right, the bottom line is this. Okay, all that stuff was perfect. The result is a break even trade. Okay, no harm, no foul. Okay, because the market did go plus 4 ticks in our favor. Not only that, this blue line did close above the MA1. So the result was a break-even trade. So conclusion is, sometimes when this thing is turning red, okay, maybe the market's telling us, hey, we're running out of gas. I don't know. But the idea, all right, is to get the risk off the table, which is get the stop to your entry. And the way you do that is if the market gets plus 4 ticks in your favor, okay, you get it to your entry price. Mark's question, do we still get into the trade? No. Why was that? Why would you think we're not going to get into the trade? Back into the trade, Bert. I'll tell you what. We're trading sideways again, right? We're trading sideways. So we need a new pivot high, Mark, before we get excited about getting long. Okay? We got a little bit of a double top here. Okay? Kind of the same action we saw back here. It was just pulled out a little bit further, spread out a little bit. Okay? So I would wait for the market to make a new pivot high. All right, so let's move on to the crude oil. Okay, first thing on our piece of paper, are we trending? Okay, first thing that should stick out to you, double top. Okay, so we're not trending. We have a double top in place. What I do see is a trending market from way back here. So that's good. But right now, we got a double top. So right now, we're not taking any trades in the crude. Certainly not long trades. All right. Now, notice how I zoom out. Okay. That's the process you should be taking. And look at this. We had a little bit of resistance here from this morning. Maybe there's a reason why we're pulling back here. Okay. So the crude we're going to take off the table. Natural gas. Okay. Here's a bullish cross. The MA1 is blue, crossing the BBC. So we're looking for bullish opportunities. The normal thing for the market to do is pull back to the BBC or the green line. Okay. In the process, and this is a habit that everyone should get into, is after the cross, engage your trend line. Okay. Get in the habit of drawing trend lines. Okay. After the cross, the trend line would have been drawn like this. Okay. Do we have a close above the trend line? We don't. Needs to be adjusted. Okay. Do we have a trend line? Do we have a close above the trend line? Wait a minute. We poked our head above it, but we closed back below the trend line. Trend line needs to be adjusted. Okay. Okay. That's how your trend line should be drawn. Is a trend line required? We pulled back to the BBC. We had an up close. No, it's not. Why? Because the cycle is blue. And we have bullish divergence or bullish separation, right? So everything is okay at this point. Now, the question is, are we trending? So hold on. A habit that everyone should get into is 1, 2. Zoom out. Okay. Are we trending? I would say no. Okay, because we had some dynamic resistance here. I know you're going to say, hey, but we poked our head above it, but look at how we came right back inside. Right now, no. If it takes off from here, it's an opportunity missed. But honestly, I see this as resistance. So that's not something that's really easy and obvious to me. Okay? So you can go through the process, but don't forget to zoom out. Like I said, sometimes we get hypnotized by this. Okay? When we're in the training room, get in the habit of hitting the zoom out button. Okay? That'll be the difference between a losing trade or a winning trade. Okay? All right. Let's go to the gold. Okay. Notice the first thing I do. 1, 2. Okay. We are stair-stepping up. We got a little bit of resistance here, right at dynamic resistance, the dynamic dots. So that's a little questionable here. Okay. So for the moment, no, I don't think gold is trending. Actually, we have a little bit of resistance here. So let's let that come down a little bit for us. The currencies have been rocking and rolling today. Are we trending in the euro? double bottom, the top here, and we're right smack dab in the middle. So no, right now the euro is not trending. Okay, if you're not sure about it, something you could take away from this is keep an eye on dynamic support and resistance. Notice how they're side by side. If you're looking at something like that, that's a clue. Hey, we're not trending, we're sideways at this point. Okay. Remember, it has to be easy and obvious. If you're unsure, don't push any buttons. Okay, just wait for something that kind of hits you right in the face. Okay. Can you overlay the dollar index? You can. We do trade the dollar index. Unfortunately, it trades on the ICE exchange, and the ICE exchange wants $125 a month for their data. So no, trade the euro, and it's got more liquidity. All right, let's go the NASDAQ. All right, I'm saying that because Frank is talking about the NASDAQ. Certainly trending. This one is an easy and obvious one, okay? There's really, it's trending. There's nothing more to talk about, okay? It consolidated a little bit here, probably when that S&P was, but notice though what happened after we broke it, okay? Right now, the cycle is red and at a 45-degree angle against us at this point in time. So there wouldn't have been an opportunity to get long, okay? This is one of those markets where you'd go from a 4-tick range and maybe change it to an 8-tick range. A lot smoother, okay? Same rules, right? So, bullish cross, pull back to the BBC. In the process, what do? We get in the habit of drawing a trend line, okay? Is the trend line required? No, it isn't. Why? Because the cycle is blue. Do we have bullish separation? Yes, we do. Okay? All right, so hold on. My phone's buzzing. Okay, so I'm back. All right, so let's go. Let's try to find something else to get. All right, so the indices are making new highs. Obviously, we're trending, right? So we're just looking for a pullback to the BBC. Okay, so let's go look for a different market. Okay, here's the crude oil. Okay, we have a bearish cross. Okay, that means the MA1 is crossing the BBC. Zooming out. Okay, we're right smack dab in the middle of this range. Okay, but here's what I'm going to do. Your trend line should be drawn like this. Okay. What I'm going to do is if we get a pullback to the BBC and we get a down close, okay. If we get a pullback here, I'm going to go inside the DOM. I'm going to execute a trade because I want to show how to do that. All right, now we're moving. So I'm going to skip this one for the moment. So hold on. Okay. So just for the record here, okay. That's how your trend line should have been drawn. It started here. Okay. We closed back into the trading range above the trend, drawn like this. The close of that candle is a close below the trend line. Okay. All right, so let me find something here we can get crazy about here. All right, we'll try the euro. Okay, look. Okay, the euro made some higher highs here. I'm not a big fan here. So hold your DOMs. Don't push any buttons. Just watch. There is resistance here. So notice the first thing I did. Okay, we get hypnotized by this saying, man, we're trending, right? 1, 2, 3. Well, maybe not. Okay, we might be expanding the range. But in the meantime, we have a bullish cross. And let's draw the trend line together. Okay, we take it right off the tops. Okay. Now, this is where we do our buying and selling, right? Okay. One thing you can do, okay, if we get a close above the trend line, we're going to get long. So here's what Michael does. The low is 42. Then the high should be 44. So if we right click at 44 and a half, okay, that will be a close above the downtrend line. That's 5 ticks above the low. Okay. 42. 1, 2, 3, 4, and there it is. That's the close above. I don't know why it didn't do it, but I'm going to do it for it. Okay. That is the close above the trend line. Okay. Now, a few things here. The cycle is blue, and we have bullish separation. Okay. So we have that going for us, right? Okay. As I told you, a warning was this trend line, this old resistance up here. So that's why I told you not to touch any of your DOMs. But let me go back to this tower, this depth of market. What I have going on here is called a bracket. If you hit this Tinker Toy triangle here, the bottom of the bracket opens. What you can do is if you select sell stop and buy stop and change the factor to ticks, and you can do that by right-clicking over buy stop and right-clicking over sell stop. If you make this an 8, okay, remember I said back here, every trade has an 8-tick stop attached to it? Once you get into a trade, it's automatically going to put the stop loss 8 ticks away from you. Okay? 1, 2, 3, 4, 5, 6, 7, 8. You can double check your work. Okay? So we're long. Okay? At 114.44 and a half. We make money if the market goes up. We have risk defined with that stop loss right here. Now, all we're doing is waiting for a close above the MA1, which is that blue line, or 4 ticks. All right? And in the end, what do we expect to happen? The green line to pull away and turn up into the cycle, right? And the market should make a new pivot low. That's what should happen. That's what we expect to happen. Okay? Now, in the meantime, the market does move up in our favor. How do I move the stop, Bert? What you would end up doing is, see this number 1, that's your stop loss. You're going to left click over it, hold the mouse down, and drag it. Release it. left click over the number 1, drag it, release it. Okay, that's how you move your stop loss up. That's what Michael is doing in the training room. Okay, he's moving his stop, moving his stop, moving his stop. Now, on occasion, he's putting targets in. Well, why is he doing that? Well, he's in there for 2 hours and he's trying to get his goal. So you'll hear him often say, you know what, I'm going to put the target up here to get the goal. Okay, that's why he's doing that. For you, you could do that if you want. But the idea is to trail the stop, trail the stop, trail the stop, because you never know if this one is going to be a runner. A runner is a market that just goes straight up, right? But you want to trail it, trail it, trail it. Because instead of making $100, right, you might make 150 or 200 depending on the momentum of this thing. Okay? So that's it. That's the process. Okay? So by pushing this button here inside this depth of market or tower, anytime we get into a market, whether we're buying it or selling it, it's automatically going to put that 8-tick stop behind it. Why 8 ticks? Because that's what the rule says. Every trade has an 8-tick stop attached to it. Okay? All right. Now, why am I not excited about this? As I said, right here, we had some resistance, and we fell off pretty hard off of that point, right? Wouldn't you agree? So what we might have done is what we might be doing here, we might have one big sideways channel, okay? But what if it goes up from here? Well, it's just a missed opportunity. But again, for me, it's got to really be easy and obvious. I like this. I like the separation. I like the cycle being blue. That is good, okay? But we still have some resistance. Maybe that's why we're getting some grief. All right? So I'm going to get rid of that so we don't stare at it all day and go somewhere else. S&P. We know the S&P is trending. If you zoom out, just keep making the higher highs, okay? Here's a warning flag right here. That's not good if you're long. Okay, why is that, Bert? All right, so let's blow this sucker up. This is a disqualifier right here. Okay, what do we expect the market to do? We expect the normal thing for the market is to pull back to the BBC, right, which is this green line. All right, and we said ideally we want everything to be the same color. When it turns different color, the cycle, that starts watering down the probability, right? If it does one of these, it's down. It's a different color and down at a 45-degree angle against the trend. That is a big fat disqualifier. Okay, that's a warning flag there that something might be changing. Okay, we might be getting to the end of this trend and then we're going to start heading down. Okay, so anytime that cycle turns color against you and it's got that 45-degree angle, that's a no-go. All right, don't push any buttons. All right. Back to our euro. See, the euro would have stopped us out. All right. So that's, like I said, sometimes you get hypnotized by this. You're thinking that's a nice bullish position, right? But if you took a few minutes just to do this, you might have said, uh-oh, wait a minute. I better not take that trade. It's not so easy and obvious. Okay. So that's a big trap people fall into. So get in the habit of doing that. Zooming out. It's just a simple process. Let's go to the British pound. I don't know why. Let's see if we're trending. Not so easy and obvious because we're finding some support right at old dynamic resistance. Okay. So let's not do anything there. Here's a good example of why we draw a trend line. Because if the market has so much bullish momentum and can't get to the BBC, but we do have a blue cycle and separation, okay, that there is an opportunity to take advantage of. Okay, right now we have a bearish cross. The MA1 is red, crossing the BBC. Okay, so we're looking to get short. The normal thing for the market to do, gravitate toward the BBC. This was Frank. Again, the normal thing for the market to do is pull back to the BBC. Okay, again, one of those warning flags. We're looking for a bearish opportunity. We're looking to get short, and this thing is blue. Okay, this is good for short. This is not good. Not only that, it's got that 45-degree angle to it, right? No trades to the short side. Stay away. Canadian dollar. A little bit of sideways action. Okay, same thing. Normal thing. Pull back to the BBC. Here is the up close. In the process, we draw a trend line. Okay. Few things that stick out to me on this one. Number one, that's the up close. The cycle is red. Okay. That's watering down the probabilities. But if we zoom out, we got a little bit of resistance here, right? So we're not even trending. Let's go back to gold. Okay. Gold is doing the normal thing. It's pulling back to the BBC, correct? This is red, watering down the probabilities, right? Okay. Right now, take note of this. The cycle's flat. Okay. It's flat. It's a little confused. Okay. Right now, until this has a good slope to it or has more definition to it, I wouldn't touch the gold right now. Okay. What I'm saying is this. Zoom out, zoom out. Notice how this has got some slope to it. It's at a 45-degree angle, probably a little bit steeper than that. That's stuff you want to get excited about. Okay. That's stuff to get excited about if you're long. Okay. If it's to the downside, you want some slope to the downside. If it's flat, it looks like it's oversold, that's okay too. This is flat. That's okay. All right. But when it's laying here at about at the midpoint and it's flatlining like this, the market's a little confused. It's not easy and obvious. Just stay away from it. Okay. Look for a better opportunity. Treasury bonds. Easy one to recognize we're trading sideways. If you're not sure, dynamic support and resistance side by side. Okay? Really that's it. If you're seeing this, that's not good. It's banging right off of support and resistance. Okay? So stay away from that. Trying to look for something else. Well, markets are kind of just trading sideways here a little bit. Any questions? Okay. There's basically 3 disqualifiers. I went over them kind of vaguely, but the first one is really easy. Okay. The market needs to be trending. Okay. That's number one. If it's not, that's disqualifier number 1. Here's the S&P 500. Okay. Zoom out, zoom out. Clearly trending. Okay. We just looked at the bonds. Okay. Zoom out, zoom out. Okay. That's the habit you're going to get into. Clearly sideways. Sideways action. No trades. That's disqualifier number 1. We talked about the cycle being the wrong color, right? This is the disqualifier number 2. If it's the wrong color and it's got a 45-degree angle against you, as it does here at the point of entry, okay, that's the second disqualifier. Okay, We saw that also on the ES right here. Even though it's going up, that is telling you there's something wrong. Okay, that's the second one. All right, and the third one is the black step line. Let's see if we can't find that. It's happening right here in the Aussie dollar. The normal thing for the market to do is to pull back to the BBC. Notice it here. Okay, what is the black step line? The black step line is this guy right here. Okay, it could be used for two things. One, to help trail your stop. Okay, the other thing is it becomes a tool to let you know whether the market is going to do a cycle reset or a disqualifier. Okay, so here it is. Okay, the normal thing for the market to do is pull back to the BBC. We have that here. Look at the black step line. It's underneath it. Okay, here's an attempt to the BBC with the down close. The cycle is underneath it. Right now, the black step line is into the BBC. Okay, that is a disqualifier. Anytime that black line is into the BBC like it is there at the point of entry, that's the third disqualifier. Okay, that'll help. That'll happen a lot when you have this, when your cycle is the wrong color. Usually that's going to happen. Okay, you'll see that a lot because it's suggesting maybe a cycle reset. Okay, see down here, the market got all the way here. Okay, oh, the black step line almost touched the BBC. It does here. And notice the color of the cycle. It's red. So it's telling you something's up here. Okay, Mark's got a question. Bert, this always trips me up. If the candle closes on the right side of the trend line, but it is the wrong color, do we still execute? Okay, that's a good question. Michael gets that a lot. And the answer is, Michael's going to give you a yes answer to that. Okay? Because if you take away candles, okay, color shouldn't matter. Okay? So watch. Let me find something that looks really easy to help define. Here's, all right, so one second. This is Bert. Hey, man. Yeah, where you? Okay, go ahead. You should be good. Okay. No, I don't see anything that says we're turning right here. Okay. No, it's in the room. No, it's very strong right now. All right. Later, bye. All right, sorry, my mic was not off. So that was a guy that was who's short, that's stuck, that's not using stop losses. Okay, so he's feeling the pain right now. So Mark, okay, here's a perfect example. Let's see if I can't. Here would be one right here, right? You're like, man, that's crazy. Okay, that would be one example. You'll see that a lot, Mark, on momentum trades. Okay, now watch. Take the candles off. It shouldn't matter. Okay, now my answer. Okay, I like to see back to back. I like to see a couple candles. Okay, I like to see this. All right. because that's telling me, hey, we're trying to do the normal thing, which is pull back to the BBC. The BBC is the green line, right? So we're trying to flag, okay, pull back, pull back, pull back, okay? So I like to see that. I like to see the same color. So what Michael's saying is absolutely true. You take away the color, it shouldn't matter, okay? Some people don't even look at candlesticks, okay? Some people don't have colors on them, okay? They're color coordinated for a reason. If everything's blue, we want to go up. If everything's red, we want them to go down, okay? All right. What else? Okay, let's see if we can't find one more example. There was the pullback to the BBC in gold. The warning flag was, this is red and flat, and don't touch it. Okay? But Bert, we would have made a few bucks on it. Yeah, if you would have taken this and drawn the trend line, you'd be long from here. And your stop would be at the entry if you didn't listen to me. But we'll see. All right, let's look at crude oil. Okay, the normal thing for the market to do is to pull back to the BBC. Okay, here's something to keep an eye on. What I would suggest is you wait for the market to make a new pivot low. This is support. Not only do we have dynamic support here, okay, but we also have a double bottom. Okay, we have a low here. I know you're going to say, but we made a new swing low here, but we closed back in the range. Okay, so be conscious of that. You have to blow it up to see it a little bit clearer. Okay, that's a low. This is a double bottom right here. Okay, so Frank is asking me how to put the maroon line back. I usually have that up. I must have taken that off. I don't know why. Anyways, here's how you do it. I don't have the maroon line on, but I want it on. How do I do it? Right click. Okay, you're in the slingshot here. Just right click over the green line or the cycle. It doesn't matter, but right click and to engage it. Go to properties. Well, it's grayed out, so you didn't hit it correctly. If you hit it correctly, when you right click, it'll turn red. That means, hey, I caught it. Go to properties. Inside the properties box, look for the maroon. Right here. S1 cycle on. It says false. Left click. Hit the drop down box. Set it to true. Save as default. Hit close. It's now on there. Okay, that's how I would do it. Okay. All right. All right, let's see. The Dow is pulling back. Okay, we have a bearish cross here. Okay. Got some support here. Okay. But let's see what happens. Don't touch any DOMs or anything. Let's see if we can do the same thing as we did before. Try to get in there and try to mess around. Try to stay on a 4-tick range. That's how quick I can be. That's the trend line. That's the down close. Okay. Here's our stop loss behind it. It's set at 16. Should be 8. Move the stop to break even. We're at dynamic support. That's a problem in itself right there. And we're out at break even. That's how quick that crazy thing is. Okay. All right. So here's the scoop. That was the down close that lit the match. Okay. The warning sign was, hey, got a little bit of support going on when we looked left. Okay. Now we have dynamic support printing. Not surprising, we had a break-even stop there. All right, 1 second again. All right, for some reason our phone number is close to JetBlue, so we get these phone calls all the time. Anyways, okay, so for that to happen is not surprising. Okay. Okay, let's go to the S&P. Notice how that's not good. This is what we were talking about before. Okay, now it's becoming a little bit more evidence. Maybe we have finally run out of gas here. 6E, okay. No, the 6E is sideways here. Okay. We had a higher high. I like that. Okay. We did the normal pullback to the BBC, but this is a mess. It's the wrong color. And now we're setting a new trend. We're kind of trading sideways here. All right. So I think we're going to be caught sideways here in a few things. So I'm gonna call it a quits to the end of the day here because I think we're going to be stuck here. All right. So here's the scoop. A few takeaways. Number one, get in the habit of zooming out. Okay, that's a zoom out button here. Okay, a lot of times, as we showed earlier, okay, you can really get hypnotized by the action if it's blowing up when you're looking at Michael's charts. Okay, just zoom out 3 or 4 clicks. Okay, and you'll see a bigger picture. That might be the difference of a losing trade or a winning trade. Okay, so take a look. Get in the habit of zooming out. The other thing to get in the habit of doing is after the cross, let's say we're trending. No questions asked. I'm looking for a bullish or bearish opportunity. I have the green light. Okay. After you get the cross and you've defined, hey, we're trending, I want you to get in the habit of drawing trend lines. Engage this trend line and just start drawing them. Okay. Right or wrong, get in the habit of doing that. Okay. We talked about the 2 reasons. Okay. Number one, if it has so much momentum, it's not going to get back to the BBC. And if you have that bullish separation here, okay, it's time to go left and get inside the DOM and execute a trade. At least you're in a position to do that, not fumbling after the fact. Okay. The other thing is, what if the cycle turns color on you? Well, the trend line's required. You'll have the trend line already drawn out. So if it happens to break that trend line midstream while you're in the middle of the trade, again, you're in a position to swing right over here and push a button. Okay, so get in the habit of drawing that trend line. Okay. If you're not sure about how you're drawing the trend lines, or if you try drawing them off the correct tops, Michael's a good guy to ask about that. You can ask me. You can send me some screenshots. I could take a look at them. Okay. The other thing to do is really keep an eye on the cycle and the slope of it. If it is the wrong color, you're asking for trouble right away, right? Because it's watering down the probabilities. But if that thing is curling over and it's going against you at a 45-degree angle, okay, that's one of the biggest traps that people fall into. The trending, getting caught sideways, and that cycle turning colors is the 2 big ones that I see. And I would go as far as saying this. If you even have to ask yourself the question, hey, I'm not sure if that looks like a 45, it looks closer to 30 or 25, then don't do anything. It's got to be easy and obvious. Easy and obvious would be everything to be the same color. Okay? Then you decide. That will mean less opportunities, okay? So you have to decide what you're signing up for, okay? So in the end, if you decide that you're going to go down the CFRN path and you are brand new, what's this all about? In the end, you're signing up to be a scalper, okay? You're not learning to pick the top and pick the bottom here and trade it from point A to point Z, okay? You're learning to take a piece out of the middle like we were doing this afternoon and trail the stop, trail the stop, trail the stop, trail the stop until what? That green line ultimately gets into the cycle, okay? And you're going to be on a 4-tick range. So you're going to be looking at the market under a microscope, all right? So you're going to have to be engaged. You'll have to be in front of the screens and watching, okay? And not only that, you're going to have to get used to pushing buttons on a DOM, okay? So there's a learning curve if you're brand new. The good thing is you'll get a demo. You can practice. Good thing is CFRN says practice, 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 right? They're not really shoving you to get in there and start trading. I certainly won't shove you in there and tell you to start trading. Those guys haven't even pushed a button from day one, okay? Everyone's got their own pace. They're going at their own speed. That's up to you. Some people are still working, doing this part-time. You decide, okay? I can only offer you support, but you're going to have to raise your hand, okay? That's why I do the CFRN Thursday thing for once an hour every Thursday, because I can reach out to a larger group of people, maybe to those that are afraid to raise their hand. So everybody wins. So that's why I do it too. So anyways, that's it. I will see you in the morning. If Michael's not there, I'll be in the background. If I see something, I'll let you guys know. I know if he's not there, Dwayne will be in the room. If Dwayne is talking about something, I'm going to let him be. Let him talk about it. What is the amount of free time on the demo? It is two-week periods, so you'll get a total of 4 weeks. Okay? Two-week increments. Okay? The exchange allows us to give us up to 4 weeks of their live data for nothing. After that point, they put the lock on it. There's ways around it, but you have to call and email me or discuss your options at that point. But at least you get 4 weeks. All right, that's it. So we'll talk next Thursday from 1 to 2. And if not, I'll see you in the morning.